So we've got an awesome guest on the Wise Wealth podcast today.
My mission really right now is to open up real estate investments to a much wider range of people.
And yeah, we've done 2 investments so far. We've done over £200,000, and I put 100,000 into each one. And I think on some of them, the returns are, above 9%. Next year in 2024, there's like over 40 elections globally. Obviously, with the US and the UK being one, there's going to be a huge amount of volatility. So I saw it sort of like
my parents always talk about the first property they bought was kind of £10,000. That same property now is more like £500,000, if not more, since we started Tab. So we've lent almost £500 million since we started doing that at the end of 2018. We've just announced that we've raised £300 million from Natwest.
I am a buy-to-let as well, so I do have my own property that's been rented out at the moment, and luckily I've got great tenants. But so we've got an awesome guest on the Wise Wealth podcast today. We've got an old friend of mine called Duncan Kreeger. So over to you, Duncan. Can you give yourself an introduction to everybody that's tuning in today and listening to what you got to say?
Sure. Thank you very much, Sam. Good to see you again. I'm Duncan Kreeger. I am the CEO and founder of Tab. And what Tab does is we have tried to revolutionise the way that people invest in the UK real estate market. Fundamentally think that there is an opportunity for innovation and technology to have a real effect on the way that people look at property investments and the access that they can get to these types of investments. So I've spent most of my working career in property and finance. I qualified as a mortgage broker nearly 20 years ago. And since then, I built a lending business, which went on to be one of the largest non-banking financial institutions in the country. So really enjoyed my time there, founding that business from my bedroom and then working through a sale, traditional kind of sale to a private equity firm. Sat on the board with that business for a couple of years and then felt there was an opportunity to go out and recreate what I'd done before, which was basically short-term lending. So we were a mortgage lender. Second time around, I felt there was an opportunity to use technology to our advantage. And in the last 5 or 6 years, I've been building Tab, and we've set about using all of the available technology around us to allow people to sign up as an investor, invest directly into loans, which I know, Sam, you've done yourself. But also what I see is the future, which is allowing people to invest directly into income producing real estate. So, my mission really right now is to open up real estate investments to a much wider range of people, because typically investing in property has kind of been held back for the rich and famous, if you like, those that have big deposits and borrowing power. So my mission is to open up real estate to a lot more people, and then also to make it much more of a liquid environment, so that you don't have to put your property on the market and sell it to somebody else over a 3 or 6 month period in order to get your money back. So there's quite a lot going on. Tab's been a real success, and obviously happy to delve into as much detail as you would like.
Yeah. No, I think it's absolutely awesome. And for everyone listening, 100% right. I've already done some investments with Tab and I absolutely love it. I think it's an awesome approach to being able to diversify my portfolio. I think, when you look at it and how crazy the market's been, and I think next year in 2024, there's like over 40 elections globally. Obviously, with the US and the UK being one, there's going to be a huge amount of volatility. So I saw it sort of like what's a good way of me being able to diversify my investments, but not having anything sort of massively politically exposed that's going to go crazy, but up or down, so to speak. I mean, even yesterday, like Black Friday with Shopify, that was absolutely crazy. The shares are up 4.5% because they came out and said Black Friday is done amazing. But with this, it's more about, can I put something that's there's no stress on my plate, from a perspective of I don't need to worry about it on a day-to-day basis. And we've done 2 investments so far. We've done over £200,000, and I put 100,000 into each one. And I think on some of them, the returns are, I think, above 9% that I'm
Yeah.
getting per annum. And it's
Yeah.
nice, you know.
Yeah, I mean, there's always a lot of negativity in the news. You know, there's always something negative to talk about, and unfortunately, in the world that we live in at the moment, there is actually a lot of negative news to report. But I think, you know, and then real estate in that kind of through that kind of lens is always up, it's down, it's this, it's that. Interest rates obviously have a big effect, but my career has always been around real estate, and the more I've learned over the years, over every 10-year period, real estate has proven to be a pretty robust investment. Almost every 10-year cycle, no matter when you start and when you stop, you'll see that property continues to go up. There's a huge supply and demand issue, which anyone with any business sense will tell you is typically a winning recipe. So, you know, my view is that although property has had a relatively difficult time over the last 18 months, predominantly because of interest rates escalating so quickly, it's actually presented itself as a really amazing time to buy property with a long-term view. So capital values have come down, rents have typically held strong or gone up a bit. And I think if we look back in another 10 years from now, we'll say that was a really interesting opportunity and a good time to go and buy real estate.
Yeah. What's your opinion? We've had I had someone else on the podcast not too long ago, and I don't know. I didn't know if the fact was true or not, and I still haven't verified it. But they said property doubles every 10 years. But I look back at the stats, and I'm sort of like, does it?
Well, I was a bit more cautious when I just gave you my view.
Yeah.
It's always gone up. It will sort of perform relatively well. There are a lot of 10-year periods where property will have doubled. I mean, if you don't have to go back very far for it to have been a lot less. You know, my parents always talk about the first property they bought was kind of £10,000. That same property now is more like £500,000, if not more.
Yeah.
I don't think we'll see that much growth because we're just starting at a much higher level. But I do see, you know, there are some issues that need to be fixed in order for property to double again in the next 10 years. But I do see consistent returns. I do see rents going up, and I do see the way that people can access these becoming more interesting, and I think that will help the market as well. But if you look back, you'll see lots of 10-year periods it has doubled. Maybe not quite that aggressive at the moment.
Yeah, no, yeah, okay, fair enough. I appreciate the sort of valid point. It's good to see. I suppose just for everybody listening to sort of like break down exactly what is that money that I've invested into with Tab. It's I think you're probably better to explain it, but ultimately I'm lending money, aren't I?
Tab offers something two different products which work in a very similar way, but our DNA comes from lending. So the investments that you've made so far are loans, and what Tab does is we are a mortgage lender, so we don't lend on people's primary principal residence, so we're not a regulated mortgage lender. We don't lend on people's homes. The types of investments that you've gone into, Sam, is where we've lent money to a property investor or developer. We take a charge at the land registry. We typically lend around, say, 50 to 70%, but I'll use 50% in this example because it makes things easy for me. So if we're lending to somebody on a £500,000 property, we would lend, say, 250,000. And then we invite our investors to come and participate in that £250,000 loan. So could be just two investors of £125,000 each, which is roughly the sort of level that you've invested in. And then the way that Tab works is that we retain some of the interest as a management fee, and 75% of the interest, the majority of it, we pay to you as an investor. So the simple maths are that if we charge 10% per annum to the end user, then Tab would retain 2.5% a year, and 7.5% a year would be paid to you. And we price those loans on a kind of risk and reward basis. So if we were lending 70%, we might charge 12% per annum or more. And if we were charging 50% or less, then we would charge the borrower less. And that would affect your risk profile and also the returns that you receive. What I think makes it interesting is that we pay investors on a monthly basis. So if you invest into a loan that's for 12 months, you will receive interest every single month during the course of that loan. And when that loan redeems, then you get your money back. So what you've done, Sam, is you've opened up an account online, you've gone to tabhq.com, you've gone through automated AML and KYC checks so that we know who you are. It's important for us to know our customers. And then you see these opportunities presented to you and you have the option to say, yes, I like this one, or this one isn't for me. So there's no kind of auto invest function at the moment. It really is a kind of, you pick which ones you like. It might be a property you know, or you understand, or you believe in. And similarly, something might not take your fancy. And then the idea being that you can take an amount of money, let's say £500,000, and you can spread that across 5 different investments. So they would have different maturity dates, they would have different risk profiles, they would have different characteristics effectively. So that's what we've done effectively very, very well since we started Tab. So we've lent almost £500 million since we started doing that at the end of 2018. So, you know, business is significant size. We currently manage a loan book alone of approximately 200 million. So over half the loans that we've written to date have redeemed and come back. So it shows a lot of positivity in the platform itself, which is really important to us. And, you know, constantly trying to stitch in more bits of technology and now AI quite effectively to help us make better decisions, to make quicker decisions, to give you as a customer, whether you're an investor or a borrower, much more access to real-time information about your portfolio. And I'm just surprised sometimes when I see how far the finance industry lags behind on technology, and that's why we're keen to adopt AI at the rate that we are, because there's so many positives that we can give back to our customer base.
Yeah, no, I agree. I think just for everyone listening as well, just because I've done that amount doesn't mean you have to as well. You can invest from like £1,000 upwards, right?
Yeah, that's right. I mean, the minimum's always been 25,000 for a long time. But as the technology has become more useful, we've reduced that bar to £1,000. So we do allow people to access these products from £1,000.
Yeah, I think that's actually a huge step in this space, because when you look at it from my perspective, I'm like, I am a buy-to-let as well, so I do have my own property that's been rented out at the moment, and luckily I've got great tenants. But you know, the stress of then having to go, oh, I've got to find a new tenant. They didn't turn up and have, you know, rent paid for a month or something, or 2 months, depending on how long it takes to get filled. I found that this approach of investing was much more stress-free. I didn't need to worry about that. And obviously, when you're doing it from a commercial perspective, you know that, you know, it could be a 12 months loan, it could be a 24 months loan. You know that for that period of time, you have that income coming in on the 10th of every single month, and it's a nice aspect to have.
Yeah, I mean, there's a couple of things there. So we talked about the lending platform, and what I've been doing all of this time really is to work to using the same ethos exactly as I just described for us to go and buy an investment property on behalf of our investors. So take the scenario again of a £500,000 property. Now, rather than lending against it, what we're doing is raising money from our investors. And I know this is something you've committed to doing as well, Sam. Thank you very much. But what we want to do is go to our investors and ask them to buy the property with us. So they're going to own the asset themselves. Again, could have 10 people with £50,000 that all make up that £500,000 ownership. So just to some of your points, what Tab's been doing is going out and looking at hundreds of properties. So part of that research piece at the front end is something that people just don't have the time or the wherewithal to do. So the research, I think, is a really undervalued piece. Then in this particular scenario, and it's a bit more money than the £500,000 example, but we're buying a property that's let to Travelodge. So we're buying a UK household brand with 18 years of income, you know, being paid and managed fully by Tab. So another one of your points was about the management side, collecting rents, paying the bills, paying agents, doing your annual inspections. All of these things are time consuming, but more importantly, can be costly. and also can damage the value of the asset if you don't keep these things up regularly. So what tabs,
that in itself, I think, is just insane to be able to do that. I know you've taken on a big amount of capital as well from an individual bank, so we can talk about that in a little bit. But I think like the side of this from my perspective is that you can take average Joe Blogs that wants to get into property but only has £10,000. And now he can diversify across 10 different properties, just like he could if he was a high net wealth individual, and get the same returns without having the stress, like you were just saying, all of that work and time effort of managing and going down that route. But like you just said, being able to buy into something like Travelodge and being able to have sort of like, I would say that was institutional grade investments. I would say that was that sort of size.
Well, I mean, it's not just you. I mean, those sort of investments are owned by institutions, and the main reason are, you've got long-term income. So institutions don't typically buy residential flats that are let for 1 year on an AST. They let for long-term income. And also, Travelodge is a £1 billion turnover business with a £200 million profit. So they're just a better quality tenant than an individual, however good they are, on one property. So you've got the weight of the operational business behind tenancy, and they're renowned for investing in their own properties and innovating, moving with the times. So it is an institutional grade product, and that again is, the sort of obvious example of where property's excluded from the masses is kind of one point. When you take it to the extreme and you say it could be a Tesco investment, or it could be something let to a huge corporation. Those are properties that are just out of reach of 99% of the population. So that's really my drive and my desire, is to open up the hardest properties to everybody, not just prove that we can do kind of small little investments.
I think that's amazing. And I suppose just from that perspective, with that Travelodge as an example, are institutions buying into that as well or not?
Do you know, we've got a very, very broad investor base, and it's changing all of the time. So fortunately for us, we've never had to invest in our sort of investor onboarding process. So investors have just gravitated towards us. Over 1,000 people have registered to invest with us since we started, and well over 200 or 250 of those have invested for regular returns and seen the cycle. That is a huge mixed bag of investors. So you've got individuals, entrepreneurs, property people, but you've also got them investing through a variety of different entities. So you can invest via a limited company. You can invest in these types of commercial properties through your SIP or your SAS, your pension. You can invest in your children's trust, in all different types of entities. So what we found is that one investor could actually be representing their regular company, a charity. In one case, we've got somebody who's investing into the Travelodge via their charity, because they want to build up regular income, they want to protect their capital. So that's a really exciting story as well. On the institutional side, I mean, Tab as a business, we've just announced that we've raised £300 million from Natwest. So that's a pretty big achievement. The structure of that product is called a private securitization. So it's sort of pretty complex in the way that it's designed. The exciting part for us is that it gives us access to much cheaper capital than we used to from where we've obtained capital from before. And the main driver of that is that we want to carry on giving back to our customers who are the borrowers on the lending side. And we want to be able to innovate and offer new products, longer term mortgages, which we've just launched a 10-year mortgage product to coincide. And all that, and we do have a big drive on sustainability, and you can't be, I should say it's easier to be sustainable if you're able to keep reducing your costs, and it makes it easier for people to stay with you.
What on earth just makes NatWest go, we want to give you 300 million? How does that even happen?
I mean, look, I can tell you that, I mean, the short version is that we, first and foremost, a big vote of confidence in the business that we've built. So whether they say they want to do it or not, I would say the difficult part is the due diligence, them getting underneath the skin of the business, looking at the policies and the procedures and our reporting. I'd have to say at this point, the technology that we've built has helped us dramatically. People underestimate the value of technology. I think people were very quick to tell me that we didn't need a 5-man in-house tech team as early as we did when we started building the business. But my thing has always been about collecting data. One central source of the truth is kind of my message. We collect data, we put it into one central hub, and then we are able to report on that data in an infinite number of ways. So being able to track a loan from inquiry through the application stage, through the due diligence, through to completion, to track that same loan or asset, its regular payment terms, the tenants, the values of that property, and then all the way through to redemption, has allowed us to put a pretty compelling message together. So technology, number one. Number two, I think, is the strength of our, not in this order necessarily, but the strength of our management team has been really big help. So again, I've set about putting together an unbelievable board. Our finance director is ex-EY. Our strategy officer is an ex-litigator, and so on and so on. So we've built a board that is really impressive, not just on paper, but when you meet them. And so number two, I think, is the strength of our team. I think number three is our ambitions. So we've presented a plan to the bank that they believe in, and we've evidenced to them that everything we've said we would do over the last 5 years, we have done, if not better. And I think they really, really like that message. And I think another piece of the puzzle is having good representation. So EY have represented us during this fundraise. We thought long and hard about how we wanted to present ourselves to the market. EY were our corporate advisors. They sort of presented us to 5 different banks. We went and had meetings with all 5 banks, what I would call management presentations. We got five indicative offers off the back of those meetings. Wow. So I think it's a really big testament to the work that we've done, and a big vote of confidence. Effectively, we had our pick of the bunch, and they're all offering slightly different things. Now, to sort of answer your question about do institutions want to go into these products as well, and the answer is a resounding yes. So Natwest have provided the senior capital. We also work with an American debt fund called Atalaya, and they've also come into this fundraise. So there's a kind of few layers to the 300 million. And I think what that says is it's not just one bank that we managed to convince this was a good idea. It's a process. And if I'm honest, it took us over 12 months from starting that process with the to actually getting our hands on the cash. And a lot of upgrading needed to happen within the business in order to get from we like it and we like you guys, and to signing on the dotted line. But massive achievement. I
suppose the question there, massive achievement. I mean, it was huge news, but I suppose from sort of like my perspective, playing devil's advocate, why don't they just do it themselves?
Well, you've got to think about how banks are set up and what they're set up to do. So look, they're a huge organisation. Firstly, they do a little bit of it themselves. Okay. They obviously do mortgages themselves, and they lend. What they're not looking to do is attract to sort of penetrate every single little micro market. It's a lot more efficient use of capital for them to back one business and to buy into their operations and their the different products that they're happy to offer, and then to allow them to use that capital on their behalf. So they've got one customer effectively, which is us, and we have very strict reporting guidelines. We need to report monthly on the makeup of our portfolio and our all of the different things going on, which again the technology helps with. But for them to start opening up branches and doing development loans and bridging loans to everybody that walks in through the street would require them to build a much bigger business. I mean, another question really is, why aren't they using technology in the way that we are?
Yeah, they're all old people, aren't they?
Yeah, which to be honest does baffle me.
Like legacy.
Yeah, and that's it. They're effectively using banking systems that have evolved since the 80s and 90s, where they've got information piled on top of information. Obviously, it's super sensitive in that they're managing real people's money, and I think there's a nervousness to change and pivot with the times. So I definitely appreciate that we had the opportunity to start again and this technology was available. But to me, I think that there should be a much bigger drive for. I think a good way to explain this is Revolut. Revolut is actually not a bank, but they operate like a bank. And Starling's maybe a better example. But my kids, who the eldest is nearly 10, I can promise you they're not going to be walking into a high street bank anytime in their life. They aren't going to have a checkbook. They're probably unlikely to have a bank manager. The way that we have operated up until this point will be different in 10 years' time. If I look at Revolut, which is the online bank that I use, it's dramatically better than what
I also use them.
It's dramatically better. I mean, but I don't have to speak to anyone. I don't want to. I have access to all of my accounts, multi-currency. I can get debit cards instantly in different names and different sub-accounts. I can have savings accounts. I can get reports on how much I'm spending on food or petrol or anything that my bank have never cared to deliver me in any way, shape or form before. I can send money to my friends over the dinner table. I can pay for things abroad. I can pay on the touch of and I think this is just a prime example of where the banks, in my view, had that all in the palm of their hands. They had the customer base. It was probably more difficult for businesses like Starling and Revolut to actually sign up customers. But I can promise you, once you've used it, you wouldn't run back to your local high street Barclays.
I love that side of it. I love that side of it. I think that they're so good as well, like the instant payments, things like that. That's definitely something that I really value. The Monzos and Revoluts. I'm just surprised that the banks didn't go and acquire them. It just didn't make sense to me.
I think there's a little bit of them thinking that they know what they're doing, and the big four, the big five banks, can't be touched, and they'll always be institutions. My thing is, I expect people to invest in property more like Revolut and Starling.
Yeah, I think you're going to start seeing that. I think we've already seen it. We've previously spoken about this. We've already seen it sort of in the art market.
Every single asset class now, you invest instantly from your phone. Art, wine, gold, cars. You don't buy a gold bar and put it under your bed anymore. If you want to invest in gold, you get your phone out, you get the number of different ways where you can buy as much as you want, from £1 to £1 million. It will be stored for you, it will be looked after, the price will be reported to you on a daily, weekly, monthly basis. And when you want to get out of it, you don't go back under your bed, put it in the car and drive it down to the local bullion dealer.
You could do that on Revolut as well. You could literally transfer into gold on Revolut.
Yeah, so and I'm pretty sure you'll be able to do property as well.
That will be cool. That's the next sort of deal that Tab's got to get now. You got to reach out to Revolut and say, look, do you want to buy a slice of this Travelodge? Jump on in. So I suppose from Tab's perspective, do you think that AI will become a big part of Tab in the near future?
The near future, yes. I mean, what the medium term looks like is almost too difficult to get my head around at this point. I definitely, one of our core values is innovation, and we do that because fundamentally we think it's really, really important to stay at the forefront of these types of things. I mean, on a very personal level, I sit up building my own GPTs at night at the moment because I'm infatuated with the technology. In a real world basis, the way that Tab's using it are in a number of different ways, and we're building a few different versions, one that will help our customers and one that will help our staff. so in the simplest possible way. For our staff, we've been loading in loads of corporate information into a version of ChatGPT, which allows them to access information about our lending parameters, the makeup of our portfolio, our financial performance. It means you can literally just talk to a chatbot and ask it questions specifically about Tab, which is absolutely unreal.
It's like a staff handbook, isn't it? It's like a staff handbook, but more advanced.
Yeah, much more advanced, and also just more intuitive. But I would say every single department in our business is using AI behind the scenes at the moment. So, the finance department is using it to analyze data and to draft reports and to analyze reports. The marketing department significantly are using it to help draft content, templates, to loads of aspects of marketing which are already being impacted. We just started recording sort of how to invest in property for beginners. I mean, we've used ChatGPT to set out the 6-part series, all of the structure of those conversations. I'm not saying it does all of the work for you, but it does a significant part a lot quicker than you can yourself. And then in the, again, in all the different departments, you can use it really effectively right now to help you draft emails, to find people to access with those emails, to follow up. And that's without the integration into our email accounts and stuff that we're building at the moment. But also on the lending side and the property side, we're using it to help analyze stuff really quickly. So to give you an example, all of our properties have a valuation that we lend against, and we're currently using an AWS version of AI to summarize those reports and to check them immediately against our lending policy. So you get, at the click of a button, you get back a couple of pages that effectively goes away and does the work that would take an underwriter a significant amount of time to do. That then allows us, for our underwriters, to use their brains and to spend the time working on the most important parts rather than to doing kind of some of the basic boring admin that's required in order for you to make good lending decisions.
I think that's so cool to actually hear real life sort of, use case. So do you think that, without dobbing anyone in it, do you think that people are having a higher work output, or do you think that they've now just got more time to sort of twiddle their thumbs? Do you think you've seen?
I mean, look, I've thought a lot about this, and I value the people in this business very, very, very highly. I mean, I've handpicked almost every single one myself, and I don't see a scenario where we don't need them anymore. I do see a scenario where we can do double or more than we're doing right now, more efficiently. With no less efficiency, we can do at least double what we're doing and have an even better output with the same team. So that's really, really exciting. I mean, just give you an example. Our tech guys are using in GitHub, where they write code. They're using AI in there, which basically what it does, if you start writing a piece of code, it will finish the code for you and say, is this what you were looking for? Assuming it is, because it almost definitely will be, it will then say, before you go, we think you should also add on this, this, and this. So it's writing the code for you. It's not just saying, oh, it would be a good idea if you could build this functionality or that functionality. It's writing the code. So then our developers are then taking half the time to double check and make sure that it's hooked up properly and it hasn't missed anything or forgotten anything, and delivering 3 pieces of work rather than taking the same amount of time to finish the first piece and then to think about what could we do next. So
that's interesting.
It looks to me like that in a real world example, our developers are sort of 25 to 50% more productive immediately. And it's just being aware of these tools that are available, and they're just so inexpensive compared to other things we would have done in the past.
Yeah, I mean, I suppose that's the same thing. So your sort of viewpoint is, there's obviously mixed emotions about AI, but I think that's your same approach, if I'm right in saying, it's sort of like, when the tractor was developed, it sped up the amount of work farmers could do. When computers were developed, it was said it was going to take away people's jobs, but it didn't. It just sped up the amount of work that people could do. And now AI is at that next stage where it's going to be optimizing output even further, isn't it?
Yeah, I mean, I would see AI as a new employee.
Yeah.
I see it as, you know, someone that's come to help complement everything that we're doing, to assist every single person in the business in their own way, and to allow us to do more without having to constantly speak to recruiters about who we're going to hire next.
What's exciting over, you know, the start of 2024 for Tab, and what sort of the cool projects that you're looking forward to the most in 2024?
Yeah, I mean, we've touched on them really, but I'd say the three things are, you know, we've become a UK mortgage lender now. So we're offering 10-year mortgages, which is a big step forward for the business. Typically, we've offered loans from 1 to 3 years, and that's been amazing. We've helped loads of customers, super proud of what we've managed to achieve. So we've got this new mortgage product, which I think takes us into a new sphere. The mortgage market is roughly 10 times the size of the bridging loan market, so that sort of highlights the size of the opportunity. We've got a big ESG drive in that product as well. So I mentioned sustainability earlier on in the conversation, but what we want to do is work with people on those 10-year mortgages where they want to invest in and improve the properties that they own. So there's significant discounts available to people if they do that. So number one is the mortgage product. Number two is obviously the sort of property ownership product, which on a personal level is something that I set about doing many, many years ago. In fact, on one of your podcasts, sort of pre your last podcast, back on the Coffee on the Couch podcast, we talked about this fractional ownership business. And, you know, I feel like it will be an important part of my legacy, actually, to get this off the ground and to open real estate up to more people, as we've talked about. So number two is property, and number three is AI. You know, I would normally say tech, and I think tech is really, really important to move with the times. So if you can't open up real estate to more people without using technology to your advantage, but, you know, looking at AI and the pace at which it is moving, I can see that having a significant impact. And we've hired our first full-time AI technician, which has been, you know, a really exciting move for us, with someone just dedicated on how to have a meaningful impact immediately across different areas of the business. But I can see that team growing significantly as well.
That's awesome. So insane. I suppose one of my highlights is I'm looking forward to Travelodge. Getting that off the ground.
It's coming soon. We obviously really appreciate your support and absolutely love what you're doing. Followed your journey for such a long time. Proud to say that we've become friends over a number of years, but really appreciate you giving me the platform, and also the vote of confidence with you actually putting your money where your mouth is.
Yeah, for sure, for sure. And I suppose for everyone that's listening, if they want to find out more about how to invest in property via Tab, where can they find you?
I mean, the most obvious place is tabhq.com. So if you go to our website, you'll see it should be pretty easy for you to sign up as an investor, but also to look at the various different investment products that we offer. And if you're borrowing money as well, you know, we're a pretty comprehensive lender. We lend on secured against property, so should be able to find everything on tabhq.com. But obviously, get through to me directly. In fact, I remember just giggling to myself that at the end of that first podcast that we did many, many years ago, you asked me the same question, and I gave out my email address, and you laughed in my face and said, no one uses email anymore. Email's dead. How can they DM you? Look, we're on all the social platforms. We have a sort of big presence on Instagram and YouTube as well. We're trying our best to build a following, but always through the website is the easiest way.
Awesome. Well, thanks so much for joining us, Duncan, and I'll catch up with you soon.
Thanks, Sam. Appreciate your time.